Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of natural gas. And I will also be looking at United States natural gas, ticker symbol UNG, as well as 2x leveraged natural gas, ticker symbol BOIL. But most of my analysis is really just going to focus on natural gas over here, and then I will relate the levels here to the other two tickers. And so I do want to take a step back and look at a number of key levels that I think that we're hitting that could suggest that the bottom is either in, will be in over the course of this week, or could be in the following week. So, brace for downside as always, but there are just so many signals right now that are lining up that suggest the bottom is in. So I'm just really excited about that, and I'm really excited to give a big picture perspective on this. So yeah, I'm just going to start. And to begin, I just want to point out that on Friday, February 16th, it does look like we put in a bullish engulfing candle. It's not super big, but it does engulf the previous day's candle. And also noting that we closed at a price of $1.65.2, and the low was recently hit. That would be on Thursday, February 15th, of $1.61.4. And so I think these prices are at a number of key levels that, again, could suggest the bottom is in. So yeah, I'm just going to take a step back to look at some of these levels. And really, they're based on prior lows or highs, pivot points, as well as this downtrend. And all of these levels, really, I have learned about or been able to chart myself because pretty much every day I watch Gareth Soloway's game plan. He streams it every day for half an hour before market opens, and I've learned so much from him over the past couple years, how to chart and navigate the emotions and the market psychology in the economy, stuff like that. So I would really encourage subscribing to his channel, watching those game plans, and I've included a link to this one from last Friday with a timestamp for when he goes over natural gas. So I'd encourage you to check that out. But yeah, I'm just going to go over the analysis that I've taken from watching those, as well as just looking at the charts myself, and share my perspective. And that is, basically that the bottom is in, because we see all of these levels lining up. And so one of those that, Gareth went over in that last game plan was this orange dotted downtrend, which is really based on the high around October, November 2020. We do see a test of it over here in around May of 2021. And then also the other pivot point is based on a close around the end of February 2023. And then we do get some more touch points over here. That lines up pretty nicely with current price, which I'll zoom in on in a second. Also, we do have this green dotted line based on the pivot low from August 2019 that was tested as resistance in 2020. But then we got a little bit of a fake out breakout before a pullback, and then a breakout finally in August of 2020. That was returned to around the same time this orange downtrend was tested, and that was a level that we had previously broken through right around $2. So that might be, key resistance as we move higher, if we do move higher in the weeks ahead. And then current price is marked by this thin dotted green line at a price of $1.65.2, as I had mentioned. That does correspond with this pivot low here around the end of July 2020, also being tested as support over here, following, the pandemic lows in March. So I do think, that could be an area where we do finally find support. But then finally, I do have this dotted line at a price of $1.52.8 based on this pivot low from June 2020. So it is quite possible price could continue down lower. And so it is good to have a plan for that. But I do think that there are a number of things suggesting the bottom could be in. And one other thing, it's actually hidden behind me, but I'm going to zoom in on the chart so we can look over that. But before I zoom in on the chart, I do also want to point out that the forecasted average for 2024 is at a price of $3.50. I will include a link to that in the description of this video, but I do want to note that that does correspond with the high of 2020 as well as the lows here of 2021. So it does look like that has acted as a significant level. It's possible that will be revisited this year, but it's also possible that we won't be seeing 350 this year. So I just wanted to throw that out there that, that is not a forecast that I made. I just including the link below. And so now with the chart zoomed in, there's one other level that I want to point out that could suggest the bottom is in. I went over this in a video about a month ago, hoping it would not be hit, but suggesting that it could be and to prepare for that, worst case scenario. And that is the 1618 extension from this Fibonacci retracement right here. And that is at a price of $1.64.66. So right around $1.65. And that is, the current price that we're seeing, $1.65.2. So I do think it's quite possible the bottom could be in with that. And one other indicator that does really stand out to me as being pretty significant is, you might have noticed it, this trend line that I have drawn on the RSI. As you've noticed, we've been putting in lower lows with the price, but the RSI has been putting in higher lows, and that is bullish divergence. So that could suggest, again, that the bottom is in. However, you may notice that I could have drawn this line to this point here, and that would have suggested bullish divergence as well. However, at that time, RSI was above 30, whereas now it is currently below 30, with a value of 24.72, so that does suggest that it is oversold. Also, I do want to note that the low was followed by an uptick in the RSI, which could suggest that that is the bottom with the RSI, and we will start to see that as well as price move up in the days and weeks ahead. So I do think that, there are just so many indicators here that suggest the bottom could be in. And so while I am hopeful for that, I am also prepared for, further downside if that does happen. And I will go over, what I plan to do at the end of this video. But really just looking at these levels. So what I can see from this retracement to the downside here, price later rallied up to the 618, only having one day hitting that level. So I do think it's kind of risky to expect price to go back to the 618. And so really the good exit for the last rally was the 50% retracement. And so there were multiple days where an exit could have been taken, and that's actually what I did. And so following that, we have this retracement coming down, and with the assumption that the bottom is in, could quite possibly go lower. If we do consider the 618, which was briefly hit from this rally, that would be at a price of $2.54.41. So quite possible price could go up to $2.50, which is also marked by this blue dotted line corresponding to this gap down here and the consolidation that we had below it. There could be a lot of resistance around there. And with that consolidation being below that line, it does seem like it could be a tough one to get to. And so the 50% retracement is probably a more realistic target, and that is at a price of $2.36.65. And that does correspond pretty nicely with the bottom of that consolidation, so I could see that happening. But, if we don't get there, the next level down is the 382 at a price of $2.18.89. And that actually corresponds pretty nicely with the bottom over here before the most recent rally. And so I do think that is going to be a significant level of resistance. And then just below that, we do have the green dashed line right around $3, being at $3.03.7, kind of just being around that psychological level of $2. So one to keep in mind. And then below that is the 236 at a price of $1.96.92. And again, just being around the psychological level of $2. I think that's going to be a tough one to get above, also because we do see this consolidation, looks like bearish consolidation there. And I should note that with that bearish consolidation, it is quite possible that this bullish engulfing candle that we see, it may not play out, and it's possible we could see some consolidation here before a continuation down, like to this red dotted line at $1.52.8. So good to prepare for that, worst case scenario if it does happen. But yeah, so, I am thinking that so many signs are lining up that the bottom is in, but I'm also recognizing that it could go lower, so I am preparing for that. But now, I'm just going to switch over to look at the Boyle in UNG charts and kind of do the same analysis with these Fibonacci levels. And so for Boyle, which closed last week at a price of $14.31, being up 3% on the day, does look like, let's see here, that we don't actually have a bullish engulfing candle, but it is pretty close. And so I do think it is good that, price went up. And also it is quite possible that on the 15th, there was a little bit of a tail coming down there. And so that could potentially be a bottoming signal. We really just don't want to see closes below that low, which was at $13.45. If we do see closes below that, that could suggest, will suggest further downside. But yeah, just looking at these retracements from the downside here, price went up to the 382 or nearly to the 382. So I do think that's something to consider and be cautious of. And so really the good exit level was the 236. And so considering that with the retracement coming down, we can see that the 236 is at a price of $19.88, so really around that psychological level of $20. The next level up, the 382, is at a price of $23.86, also corresponding with the low over here, so could be significant resistance there. The next levels up, I think that it's kind of hopeful, wishful thinking to expect us to get to them, at least within the next week. But the next level up is the 50% retracement at a price of $27.08, and just above that at $29.46 is that gap level where we consolidated below, and that does seem to correspond nicely with the 618 at $30.29. But I do think that, expecting price to go up to the 786 at a price of $34.87, I do think that is kind of wishful thinking at this point, but I do think it is interesting that that level does correspond with the 236 from the way down over here. They line up pretty nicely there. So I just found that pretty interesting. And before I switch over to UNG, I do also want to point out that we do see bullish divergence with Boyle as well as with natural gas. So we do have lower lows in the price, higher lows in the RSI, having been down as low as 17.43 during this low, and this low was at 25.30. It has gone up a little bit, suggesting that that could be a new higher low, that we won't be continuing down, and that it is also oversold below 30. So I do think that is a good indicator that the bottom could be in here. And then so finally, just going over UNG, doing the same type of thing, did close the week at a price of $14.99, being up about 1.2% on Friday. Does not look like we got a bullish engulfing candle there, but it is nice to see the green candle. And so looking at these retracements, we can see that during the last run up, UNG made its way to the 618, and there were actually multiple opportunities to exit at that level. But if those were missed, the 50% retracement was a good exit level with, I believe, 4 days trading at or above that level. And so thinking about that with this most recent retracement, assuming that the bottom is in, we could see that the 50% retracement would bring price to around $21.05, whereas the 618 retracement would bring price to $22.57. And then similar to Boyle, we can see that there is some overlap between some levels from the retracement down to the most recent one, and that would be the 786 at a price of $24.73, corresponding with the 50% retracement over here. So I just find that pretty interesting. But, I do also want to note that if we don't make our way up to the 50% retracement, and that could be because we do see this key level of $20, not only being psychological, but also corresponding with this gap on the way down and consolidation below it. That could be a tough one to get to. And the next level below that is the 382 at a price of $29.54. So one to keep in mind there. But then also getting back to like these lows, the 236 is at a price of $17.66. So it is quite possible, that could be the next high before we do continue down. So good to be cautious of that. But also with UNG, we do see bullish divergence, see lower lows in the stock price, whereas we see higher lows in the RSI. RSI was as low as 1684 during this dip, whereas on the dip from the 15th, that was at a value of 2601, being up just slightly, but still below 30, suggesting that it is still oversold. And so, with that, what we see, in Boyle being similar to this, as well as what we see in the charts over here, big picture, it does seem like the bottom could be in. But now, I just want to kind of go over what my strategy is, because I've recognized that this is a really risky play, and that especially with slippage in these ETFs, that means that price, is going to continue going down, and these are really just used as instruments to have access to natural gas and to trade it short term, not to hold it long term. So what is my plan? What is my exit strategy? And so basically, I've been adding to my position over the past month, but I've started to slow down over the past couple weeks. And looking at my position size, this is one thing that I need to get better at, is assessing what a full position is for myself before entering a trade. And so I did not do that with UNG, but looking at my position size now, I could view it as a quarter of a position. With that being said, I could double it 3 more times to establish a full position. So I have a quarter position now. I could buy another quarter position, the same size it is now, 3 times, and then would have a full position and not buy any more after that. And so with this dip that we've been seeing, with this huge drawdown and coming to all of these levels, bullish signals becoming pretty apparent that we are at a bottom, my strategy is over the course of this coming week, I plan to double my position size. So that would be building up to a half of a position. And if price does dip lower, if natural gas does come down to right around $1.50, I would then reassess. But then at that point, I would be ready to either add another quarter of a position or to then double my position at that price. So then I would have a full position and I would be ready to trim as price does make its way up to these levels. And so, I could be wrong. The bottom may not be in, as I have been early before. But I do think that with all of these signs lining up, the bottom is either in or very near. And so I plan on, over the course of the next week or two, plan on getting my average down a lot, but not throwing too much in, not going overboard, just building up to that full size position. And then I will be trimming on the way up, and I will be exiting, not planning on diamond handing any of this, in and out with natural gas before looking to the chart to see another top, to see other topping signals. But yeah, those are just my thoughts. And if you found them helpful, make sure you like the video, share your thoughts in the comments below, and subscribe to the channel for more videos like this. Thanks a lot for watching.